Guys, what's up? How are you doing? Welcome back to the channel. When you have seen my previous video, you know that last Friday was a pretty disastrous trading day for me from an emotional point of view. So when that happens, often I'm like, well, I'm gonna take care of my issues and this will never happen again. And then Monday comes, a day like this, the US stock market closed, but gold still tends to move. And then I'm eager to trade. And being eager to trade is not a good thing. Not a good thing most of the times. Being eager when your gut feeling is right, your analysis is right, that's a good thing. But being eager to revenge yourself for a disastrous trading day like last week, that's not a good thing. And I'm going to show you in this video why it's so important to backtest, because this data will save your ass, I can promise you. It saved mine today to check in with myself, check in with my data, and that's saying, no, this is not a good thing. So let me show you, and you can also see why it is so important that you backtest as well. Let's go to the charts. You know, as you probably know, gold on a daily is in a massive bull up run. So we are bullish on the daily and the weekly. So we are only looking for buys at this moment. And then we go to the 4-hour chart, and as you can see, we are consolidating. We are in a bit of a trading range. So we see a bear bar with some wicks, a bull bar with wicks. Then we tend to break out. But if we go to the 1-hour charts, then we can see that we did have some attempts to break out, but then we have those wicks. Let me show you. Here we have a breakout, but then it's rejected. Here we have a failed breakout attempt. Here we have a breakout attempt that's also failing with wicks. So we are struggling for the momentum. So overall, this is a trading range. In a trading range, neither the bulls or the bears are in charge. Bull bar, bear bar, bull bar, bear bar. Now I am still bullish, of course. I think we will go, but the question is, when will we go? I know that the US stock market is closed today, so there's not much volume, you know. 3484, 3468, maybe this, 150 pips for the whole range. That's not that much. So I was eager to take a trade, but I went to my backtesting data, and now this setup for me would be a SNR breakout and retest, and then boom, we go. So I went to my backtesting data, and there we go. And in my setup, the SNR break and retest setup, there is a metric I follow. It's the H4 trading range. And I have 28 setups backtested. And in this setup, I only have a win rate of 21%. So when I'm aiming for this backtest, my data shows that my win rate drops to 21%. So this is a big red flag saying, not trade a H4 trading range. And on the live chart, we have a trading range. So although buying is a good thing, the entry setup is not there yet. We are in trading range and there's no clear sign for me to take a charge, to take a trade. So the backtesting data really avoided quite a disaster today. And yeah, I'm so happy that I have this backtest data, so I can act upon it, and it gives me confidence when to take a trade or when to skip a trade, like today. And there was a period where I would try and take a trade on a day like this, especially after a bad day, like last Friday. I want to make things up, I want to restore my losses, etc. There's emotions. It's a bad thing. But hey, I'm learning, and I'm hoping you're learning something from this video as well, so we can learn together. If you like this video, give it a thumbs up, subscribe to the channel, and see you in the next one. Cheers.